In looking and going through all of these kind of retirement horror stories, what would you say would be the top 3 things that people need to prep to kind of avoid situations like this? From what I'm hearing from you and listening to, I think maxing out your TSFA would probably be amongst the number one thing.
Yeah, absolutely that. If you have a group plan, reviewing it regularly, right. Not just, hey, I got my statement in, you get one, for the end of June and the end of December, checking in on it periodically and making sure that you have the proper beneficiaries designated, and then based on what's going on in the markets, that you're still in the proper funds. And if you have a group plan, making sure that you actually have your funds going into it, right? So we told a couple of stories where people weren't actually paying into a plan when they were eligible for it. And the other thing actually is, I've known a few people. I mean, the first story we told was a lady that didn't pay into a pension plan for 21 years, but I've had a few clients come in, but they've worked at a company for a year or two and they still haven't put money into a plan. So sometimes they'll give you these big books and they look daunting. Ask your HR professional at your place of employment or ask a financial advisor. Yes, they're not getting paid to help manage those funds, but they should be concerned about your overall financial health. So and don't leave that money on the table.
That's the key.
Yeah.
They should be concerned about your overall financial health.
Yes.
And sometimes that's not the case. It's about bottom line, making money.
Yeah.
So I think it's, I don't know, like basically to recap would be like max out TSFA, make sure your group plan, and what would the third thing be, do you think?
Check for those interest income slips. So if you get a big tax slip from one of your financial institutions, know why you're getting the slip. Just better educate yourself.
Right.
Is there something that you could be doing? Could you be shifting money into a different investment vehicle to cut down on that tax bill? Because it's something that's, if you put money in there, it's probably going to be happening to you every single year.
Right.
So over time, that can really add up to a lot of extra tax dollars you could be unnecessarily paying.
And always look into decumulations of assets when you're nearing retirement. I think that's so incredibly important. Something, again, that I never learned.
Yeah, and have a solid plan.
Yes, have a solid plan in place for it. So hopefully you got something out of this. Maybe you have a horror story that you'd like to share or know somebody. And the reason why we're sharing these stories is an attempt to educate people to avoid these situations moving forward. And I mean, if you're like 5 to 10 years away from retirement, like listen to these tips, listen to these advice, and make sure that you don't find yourself in a situation where this can happen to you. So I'm Glenn Picaro. This is Elaine Godfrey, the financial architect for Canadians. And if you have any questions, please leave them down in the comments. We will do our best to try to address anything that you have, any questions, comments, or concerns. I hope this brought a lot of information and a lot of good tips to help you prepare for retirement. And any last thoughts as we say goodbye?
What's the one thing we say? If you fail to plan, you plan to fail.